With Tesla stock beginning to consolidate at all-time highs, it definitely hasn't been an enjoyable year for Tesla skeptics.
So the name of this presentation is Tesla is still a zero.
Tesla's recent report of its Q2 earnings was the fourth consecutive quarterly profit, making the stock practically a guarantee for S&P 500 inclusion. Now Tesla has clearly demonstrated that it doesn't have a demand or money problem, and as a result, many of the Tesla short sellers are running out of excuses. Those that remain are beginning to go insane with crazy conspiracy theories. In this video, I'm going to cover the insanity of the Tesla short sellers' reactions to Q2 earnings and more. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. With Tesla stock at such a high price, it certainly looks foolish for Tesla bears to come out to the media. One of Tesla's largest bears, Barclays, recently went on an interview with CNBC to tell other Tesla bears to stay in their caves. Brian Johnson, who works at Barclays, attempted to value Tesla as a car company and compare the number of vehicles Tesla sold with other automakers. This brings him to his price target of $300.
Yeah, this is our second shelter-in-cave warning. We had one after first quarter when we were above consensus first on deliveries and then following that on earnings. This quarter, we're actually looking for positive GAAP earnings, which would qualify for S&P. And frankly, despite our long-term differences on valuation, that especially in a market like we have today with the tech stocks, that's hard momentum to fight. So hence, stay in your caves.
This is what I call the hidden effect, as many of the prominent Tesla bears will only talk to the media about the stock being down so that they can keep their reputation. Gordon Johnson, one of the most famous Tesla short sellers, recently went on an interview with Wizard Institute, which is a YouTube channel that claims that they are the #1 platform to learn smart investing. However, Gordon's interview, which has been on YouTube for 2 days now, only has 19 views.
Welcome to Wizards Institute, the #1 community to learn smart investing and financial independence.
Gordon Johnson keeps running out of excuses, and his most recent argument is that the EPA is lying about Tesla's range.
But Gordon, you haven't addressed my question about the software tweaking and their ability to be ranked higher, not by them, but by the EPA. How do they do that if there's no technology there? Are they lying, or is there something else going on?
I just told you they're lying. I mean, I'm looking at this. I can send you this chart. The Inside EV's article, they tested Tesla's cars.
But I'm talking about, no, my question is, EPA has ranked them higher and higher based on tweaking, not changing the batteries. Is that a mistake? Is that... because to me, I don't really care what
I did answer your question.
I don't care.
Let me answer your question. So
Mhm.
EPA is saying they have a certain range. This company tested those ranges. The actual real world driving range as a percent of EPAs for Tesla is by far less than everybody else. Tesla's Model 3 SR Plus is 72%. The Jaguar I-Pace is 108%.
So the EPA is off.
EPA is wrong. Yes, they're wrong.
I see. EPA is wrong. Okay, and
Mark Spiegel, who has lost millions shorting Tesla, seems to be going insane with his conspiracy theories. Previously, he would argue about Tesla's low volume of sales and earnings losses, but now that those arguments are logical, he's now basing his bear thesis around conspiracy theories. Ashley Vance, the author of the book Elon Musk, Tesla, SpaceX in a Fantastic Future, recently went on Twitter to talk about Mark's investment into Tesla put options. Mark, who is furious at Tesla's Q2 earnings, told Ashley about how Elon Musk is a fraud. Ashley replied to Mark's tweet by saying, "Hey Mark, I'm sorry for your loss," hinting at the facts that Mark lost a lot of money from shorting Tesla. Mark replied by telling him, "All I have on my side are facts, Mr. Hack." Later on in the conversation, Mark said, "There isn't much to debate. When you call Musk a fraudster, for which we can both cite numerous examples, I'll retract my statement. Otherwise, as far as I'm concerned, you're aiding and abetting someone who defrauds investors." Mark Spiegel is clearly beginning to go insane, as his arguments against Tesla are based on questioning the legality of the system, rather than questioning the fundamentals. Another key point that Gordon attempts to make in his interview is that the Cybertruck has no demand and that the EV pickup truck competition is coming.
And then, they had a quarter where they could, basically execute on these reservations and show growth in fundamentals, right? Revenue, not really profit. But the problem is they don't have another car coming. Like this Cybertruck that they say they're going to build in the U.S. I mean, you've seen it, right? I mean, I don't think that a lot of people are going to be buying, this Cybertruck. And by the time it's launched, you're going to have a number of competitors. GM is going to have an electric vehicle. Chevrolet is going to have an electric vehicle. I guess that is GM. Nissan. You're just going to have so many electric truck vehicles in the market. By the time the Cybertruck is actually launched, it's not going to be a first mover advantage for Tesla.
Obviously, this statement is extremely off when we look at the pre-order numbers. The Cybertruck already has 700,000 pre-orders, and that doesn't even encapsulate the entire market for the pickup. Not only that, but Gordon attempting to value Tesla as a car company is getting the picture completely wrong. Elon Musk's Master Plan Part 2 has demonstrated the vision not just with Tesla vehicles, but also with Tesla Energy. Chamath, a prominent venture capitalist, recently went on CNBC to explain the potential of Tesla Energy in the next 20 years.
And here's the thing, Andrew, what the bulls will get right and what the bears will ignore from here is that this is no longer about cars. That's the first wave of growth. And I think people are pricing in an evisceration of traditional autos and an enormous shift to EVs, of which Tesla will get the disproportionate share. So now what is the bet? If you ask me as an investor who loves that company, it was in page 4 or 5 of their quarterly earnings release where they talk about the energy business. And they said a couple of interesting things. The first is that it was profitable. And the second is that they're also producing software now that allows effectively anybody to become a distributed utility. So what is that worth? Melissa, this is worth trillions of dollars. And the reason is because if you look at the debt stacks and the earnings potential and the regulatory framework that has allowed local utilities to thrive, it is measured in hundreds of billions and trillions of dollars.
With no more legitimate excuses to back into, many Tesla skeptics are now slowly becoming bulls. 1 year ago, we saw Jim Cramer, who was previously skeptical about Tesla, become extremely bullish on the stock.
From an agnostic skeptic to an outright bull!
Now, we're seeing Bob, a well-known automotive executive and Tesla skeptic, finally realize the brilliance of Elon Musk.
Mercedes, BMW, Volkswagen, GM, Audi, and Porsche are all coming out with 300-mile electric luxury sedans. I think they're doomed.
Bob, just before we go to Mike, do you put Tesla now in that same category? Because you've been skeptical of Tesla throughout, and yet, there is an argument to be made. They've done a remarkable job. You could question the valuation, I imagine, but go ahead.
Yeah, I fully admit that I was one of the Tesla skeptics when it looked like they were running out of cash and Elon Musk was behaving somewhat erratically. I didn't think the company had a chance, especially when they had to raise money when they were under federal or SEC investigation. I tried to do that once as a CEO, and I was told you can't. We're not going to let you raise capital while you're under investigation by the SEC. Somehow, he managed to dodge that bullet, and I give him all the credit in the world. There's no question that Elon is brilliant. And like many brilliant people, he has some somewhat erratic sides, but it doesn't change the fact that he's brilliant. He's done a remarkable job. Tesla products have improved vastly in quality over the last 18 months. His design work is terrific. So they're good cars. The company appears to be stable. Electric vehicles are probably on a growth trend. But all of that does not explain a valuation like that compared to companies like General Motors, Volkswagen, Mercedes-Benz, and so forth. It's yes, many people were wrong about Tesla, myself included. Yes, they're doing a remarkable job with the vehicles. Yeah, they probably have a pretty good future, but no rational arguments can justify a valuation like that, except that everybody believes it's going to go up some more.
Along with Bob, earlier in 2020, we also saw Steve Eisman, who was one of the main characters in the movie named The Big Short, cover his Tesla short after realizing how illogical the move was. Let me know if you think we'll get any other conversions and who will it be in the comment section below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.